Traders from around the world, what's going on? It's your boy, Ricky Cadden, back again with another real life stock review just for you guys. Hope you guys are doing absolutely smashing this week, having a very profitable week. We have had some really bearish sentiment in the market as of late, and I have been mentioning this was coming pretty much for the last 4, maybe 5 reviews, but we did happened to get a really nice bearish engulfing candle yesterday. So yesterday being last night's session, we really did just reject this particular price range at around 342 on the SPY. If I just take a look at the 5-minute chart, you can see we had this beautiful little triple top. We closed below, we retested the neckline of that, and we kind of just rolled over, retested this high, this low, and then just kind of fizzled out and broke down. If you are looking to trade tonight, guys, I would be more bullish than bearish, but obviously if we do go bearish and we do take out this 50-day EMA, just look to let it trade down to about 322 before you do look to buy the dip, and the long-term moving averages will slowly start to come into favor for us as well. So when this does kind of happen, just wait for it to kind of chop around and then bounce on higher. The E-minis today, not doing a whole lot. Most likely we'll end up with an inside day candle for the E-minis, but we are bouncing off the 50-day EMA very nicely. So I do expect us to kind of just hold up, maybe possibly for about one more day, and then maybe next week we have the rollover. Just makes sense to kind of come up and then come back down at this particular moment in the markets. Here's ticker symbol LUV, Southwest Airlines. Now if you take a look at this one, guys, we are currently at a 200 simple moving average resistance level right now on the daily chart. So this is obviously, if you are in Southwest Airlines, this is a point where you want to be looking to at least take some profits if you did buy the dip, or buy the dip on this particular level right here. Very nice little short-term bullish trend. I don't think there's going to be too much left in it, just simply because the volume's starting to die off. And if we take out this low, guys, we've already had some very nice bullish candles. If we take out this low, we're simply just going to come back down, probably to about 36, possibly 33. We'll just have to wait and see, but definitely 36 if we do break that particular low. So keep your eyes peeled on LUV. If you are in, just look to take some profits off the table. Here's Netflix. Now Netflix, guys, you do want to keep this on your watch list. We are coming down to the 100 simple moving average, and it has been a very nice level to buy off in the past. So just keep that in mind if you are looking to own shares long term. Obviously, we could potentially trade lower, but this is a very nice buy the dip location. We have currently pulled back from the all-time high. We have currently pulled back about 16%. If we come down to the 100 simple, it's going to be about a 20% pullback, guys. And just in the last 2 weeks, we've already pulled back 13% in the last 2 weeks, which is absolutely phenomenal. So obviously, at this point, guys, I'm a little bit more bullish than bearish. We are currently coming back into this particular zone right here where we have bounced before. There will be a lot of liquidity here, a lot of shares being exchanged, and I do expect us to bounce on Netflix. Here's one we haven't spoken about in a while, Bitcoin. Now, Bitcoin, guys, is currently retesting a previous level of resistance. So this is going to be a buy the dip location. We are currently at the 100 simple moving average. I myself am looking at purchasing some more Bitcoin. You guys don't have to, but definitely if you are looking, this is a buy the dip opportunity. We could obviously come a little bit lower. I get that. We would like to come buy some more, a little bit more of a cheaper price. But the great thing about Bitcoin, you can buy it in fractions. You don't have to buy the entire whole Bitcoin. But on the weekly chart, guys, we are starting to trend. We have broke out of this particular, descending wedge candlestick chart pattern, and we're just retesting. So breakout, retest, and I do expect us to slowly but surely grind on higher. It's just a matter of time before Bitcoin definitely goes higher. Here is the ASX 200. Guys, we are looking very weak on the ASX 200. I have mentioned this. We are creating lower highs, and we're currently at the 100 simple moving average. I did mention a few times that this is going to be a level of support, but we could very well break and then come back down to about 52 and some change. This is going to be the next level that if you are if we do kind of fall off a cliff here, this is where I would be looking to purchase the ASX 200, or at least look to go long on some Aussie shares. Just keep that in mind, guys. We are very, very sideways right now, and we could break lower. On the weekly chart, this is a weekly candle, and we do not look very strong at all. So hence my bearish bias on the ASX right now. Here's Qantas. Now Qantas, guys, also not looking too strong. Currently just chilling out at the 100 simple moving average. Obviously in Australia, with a lot of their flights being, I guess they're all grounded at the moment. But Qantas really not making that much money at all, and just expect them to just kind of consolidate and trade sideways. If you are looking to purchase Qantas, just look to buy low, sell high. Buy as low as you possibly can, guys. 340 is the next level of support. If you don't want to buy at this particular price, wait for it to break down, and 340 does look like a nice little buy the dip opportunity on Qantas. Here's Webjet. Also, a lot of people not doing much travel, and Webjet once again trading sideways. So in the past, guys, if you take a look at the monthly chart, we are all the way down at the 200 simple moving average. We're at a 6-year low. So we were back down here back in 2014. Now, obviously, due to the coronavirus, there is not much traveling going on, especially here in Australia with all the border closures. But maybe in the next few years, if you are a long-term investor and Webjet is something you would like to invest in, I totally understand that this is a buy the dip long-term investment, simply because it is on a monthly chart, guys. So if you're looking at the monthly chart, you really want to be looking at, years of holding, I guess. You don't really want to be looking at a short-term swing trade. But on a monthly chart, guys, if you are looking to invest, possibly just look to buy for at least, 6 to 12 to 3 years, etc. on this one. Here's crude oil. Now, I did mention crude oil was going to break down and go a little bit lower. And here it is, guys. We're going down and we're breaking a little bit lower. So very nice analysis from myself. Pat on the back for me. But on the shorter term moving averages, guys, you can see we're below all the short term moving averages, and the long term moving averages, we are just squeezing between the 100 and 200. Let it squeeze, and if we do kind of break down, we'll just wait and see what happens there. It's going to be a dip buying opportunity anyway, but crude oil, really, really nice breakdown for anyone who did catch this one on the futures market based on the analysis that I've given you for the last 2 to 3 weeks. Here's gold. Now, the gold futures just trading completely sideways. I have mentioned in the trading room that this looks extremely familiar, guys, about what happened back here. So if I just kind of take these particular bars here and expand them just a little bit, we are pretty much in the exact same pattern as we were before. And from here, guys, I just simply think that the exact same thing is going to happen as what happened in between April and June. We're going to trade sideways. We're going to have, this is a very nice descending triangle, which is a bearish chart pattern. And I do believe that will possibly just build this pressure up, especially on gold. The US dollar isn't looking extremely strong, and will most likely break out, come back down, come back up again, and then we'll slowly start to mosey on higher on gold. So if you are in gold, keep on holding. It does look like a very nice long-term hold. If you're not in right now, you can look to obviously start to take some sort of a position on gold. We are at a very nice dip buying location for gold. Last but not least, guys, here is the Aussie dollar, and I still have not moved my Mr. Squiggles here, and following it pretty much very, very nicely, as you can see here. Yeah, I mean, it is a dip buying opportunity. I have been mentioning in the past that we will come down to roughly the 50, or at least, we'll close below the 20 and then trade completely sideways. Let the 50-day EMA catch up, and then I would just guess that we would trade higher on this one. But the Aussie dollar, guys, is holding up strength, especially against the US dollar. And that's pretty much it. So be long on the Aussie dollar. I hope you guys enjoyed this stock review, and if you haven't yet joined our community and you would like to join our trading rooms, hop on over to reallifetrading.com.au. Subscription is only $129 a month. You can buy yearlies. This one is the most valuable This is the most valuable subscription out of all of them, simply because you get all the 3 bonus coaching sessions, and they are priceless. So guys, if you do want to get more consistent with your trading, you do want a little bit more guidance, let me know. Send me an email. I'll leave my email in the description below. But hop on over to reallifetrading.com and become a member. Sign up with us, and we will help you achieve your financial dreams. All right, guys, have a fantastic weekend. I'll be back next week with another real life stock review just for you. And until next time, love life, live life, and trade it.